Okay. So I have got this. This is what we were doing last time. Okay.
Yeah. Yes.
This is what we were doing last time, and we did till rent, I think. Right? Let's check. The posting we did till SK trading. That means we till this point. We have done the entries till here. Fine. SK trading is credited 30,000 and purchases debited 30. So let's see. SK trading credited 30 and purchases debited 30. Till here we have done. Okay. Now we'll continue from here. And then I saw you have sent all these files. All right.
Yes.
So good that you have tried. Okay. But it is little bit difficult to check. All right. I tried. Like it is little bit difficult to check. You can't put any marks here. So what we'll do is, yeah. So what we'll do is we'll continue. I'll finish this one and then you can keep on ticking where you have done the correct thing and where you have done a mistake. Okay.
Okay.
I will be I'll be little bit fast because you have already done this. So like I am expecting you already have some understanding on this. We have done it till 30,000. Now continuing from there. So here we have Kripal Brothers 10,000 and cash and discount received this amount. So Kripal Brothers, let's check 16th January. So do we have account for Kripal Brothers? Yes. Here we have the account, right? And in this
Yeah.
account, 16th January, we are going to
Yes.
to cash
Yeah. 9,500.
yeah 9,500 and discount received, right?
Yes. 500.
500. Now let me see, discount received, do we have that account? Discount allowed is here, received is here. Now here we have by 16th January by PayPal. Okay, 500. Fine. And now in cash you will be writing by PayPal 9,500. Fine till here, 16th Jan.
Yes.
Okay. Then what else do we have after 16th Jan? Drawing to cash. So in the cash it will be by drawings
Yes.
20 January. Fine. So on 20th we are going to write by drawings 500. Fine. Drawings account everything we okay. We haven't made the drawing account, so we'll make a new account drawings. Okay. And this will be to cash 500. The date was 20th January. Then what we got after 20th? See 24th, credit note to Karmakar. Okay. So we'll write in Karmakar and credit note account. So Karmakar, I think we'll have somewhere here. Okay. So credit note, how much was it?
4,000.
So 4,000 as credit note and the date was 24.
Yes.
The date is 24 January. Okay. And here, what was the entry for this Kripal Brothers? What was the date? I think 20th, where we got the discount. No,
No,
16th.
sir. It was same. 16.
16th, yes. Fine. So this is done by credit note. Now in credit note, we'll write to Karmakar. Okay. So in
Yes.
credit note account, we'll write to Karmakar 4,000 and this was on 24th, right?
Yes.
Fine.
Yes.
This is done. What's the next journal entry?
Mm,
24th. I think now it is 26th.
yes.
SK Trading to credit note. So in SK Trading, we'll write credit note SK Trading. Where is it? SK Trading. So here we'll be writing credit note. This was how much?
5,000.
5,000. Okay. And we have the credit note account. Yeah. So here we are going to write buy SK Trading 5,000 and the date will be 26th January. Fine. What else have we got from here after credit
Sir, on 29th January, SK Trading account
SK
debit.
Trading to cash to discount received. So in SK Trading, we are going to write cash
Yes.
and to what was that discount received, right?
No, sir, discount allowed.
Discount allowed. Yes. So this was discount allowed.
Yes.
Okay. It cannot be discount allowed though. SK Trading is our creditors, right? See?
Oh, maybe then I made a mistake.
Yeah. The words that you have used, you cannot allow discount to your creditor, right? They will allow,
Yes, yes,
you will receive.
yes,
Okay.
yes.
Discount received. What was the amount?
250.
250 is the discount, right? And what is the cash?
9750.
And the date?
29 January.
Right? Buy SK Trading. Discount received, we will write buy SK Trading 250. Okay, on 29th January. And in cash, we will write buy SK Trading. Here we will write buy SK Trading 9,750 on 29th. Done.
Yes.
What else have we got after 29th? 31st,
31.
we have salary to cash. Okay. 31st, we have salary to cash. So here it will be buy salary 1500. So buy salary 1500. Okay. 31st January. And in salary account, we'll write to cash. So I don't think we have a salary account. We will write to cash. What was the amount?
1,500.
1,500. Done. Now we
Yes.
don't all this now. Yeah, you were saying something?
No, sir.
So now see what we have done right now is known as ledger posting. Fine. Now we will start doing the balancing. This is called closing the ledger. This is called closing the ledger. And here I need some space. Fine. So what I'm going to do is I will just take this one little bit up so that I can do some maths below this. Okay. I just need to do that space. So what I will do is I will take this just little bit here. Okay. That's it. Fine. So that I can do some maths below this. Now, see, we'll take the blue pen, and what you have to do is you have to start, like, filling up this whole thing, like, start finalizing the account. So basically, now see, what you have to do is draw two lines like this, okay, and then do a total. So this is what 2000, and this is what 0. So you have to write the highest one, and then wherever you see that there is a gap, fine, you write buy balance CD 2000 carried down. All right, and this will be done on the last day, 31st January. And here you will write 1st February to balance BD 2000. So this is the opening balance for the next period. Okay, and this is 20,000. Sorry. Now tell me, are we fine with that? And again, don't ask me why, ask me how. So are you okay with the how of this? What you have to do you understand? Okay, draw two lines.
Mm.
This is going to be little bit clumsy right now, dirty. Draw two lines, do the total. Fine. Do the total of credit side and see what do you get.
Sir, I have one question from the Khanna and Bros account.
Okay, ask.
Sir, first on 1st January, we already wrote to balance to opening balance 20,000. On
Okay.
the right side, it's okay that we wrote by balance CD, but why do we need to write to balance on 1st February? Because
See,
it's already balanced
okay.
20,000 on that
Very,
side.
very good. Anyways, I will answer that question, but this is what I asked you in the beginning that don't ask why. But still you ask, I'll answer why. See, on the first
No,
day, on the first day, all right, you had a balance with Khanna, right? On the first day, what is happening here? See, on the first day, you already have a debit balance, means this guy is going to pay you money, correct? All right,
yes,
you are going to receive some money from him. Fine.
yes.
As on this day, you are saying, I will receive, I will receive 20,000 from Khanna. Okay. Now, throughout the month, he has not paid anything. So at this day, what will you say? Okay, I forgot about that 20,000 because you didn't pay it.
No,
So here, again, you will say that, 1 month passed and I still need 20,000 from you. Yes or no?
yes.
So what is happening? On 1st January, you said that balance brought down, opening balance. BD means opening balance. So the opening balance for the month of January is 20. And since no activity happened here, on 1st February, if you are again saying that for the month of February, this is the opening balance, what is wrong with that?
No, sir, yes. But if you could go up back to Khanna and Bros account, you will see that, I mean, how will these two sides match? Because on the left side, we'll get the sum of 40,000 because,
All right,
we
wait,
didn't.
wait. Easy, easy. Talk about debit credit, okay? It will be easy. So on the debit side, you are saying it will be 40,000, right?
Yes.
Can you prove that how? Because I am doing the balancing here. I am saying here 20 and here 0. So I draw a line. I'm saying
Okay.
this is 20, so I will have to put 20, this 20 comes here. Now you are saying this 20 is 40.
No, no,
Does
sir. I get it now. It was a mistake.
so you got it right now?
Yes, yes.
Okay, okay, fine. So now again, let's start. What you have to do again, focus on the what of it. Fine, we'll talk about why and how. Maybe we'll talk or maybe we'll not, because I told you in the beginning that there is a system. This is how it has to be done. Okay, and it will take time for you to understand, because see, again, you asked a very relevant question, and I hope I gave you a very satisfactory answer here, right?
Yes.
Okay. So that, that understanding will take some time. Now, first things first, all right? For the time being, what you are supposed to do? For the time being, what you have to do is the question. So you have to do the total of debit and credit for cash. Do it. Debit will be 34,500. I helped. Come on, credit side, tell me.
1 minute. So 26,350.
Here we have 26,350 and I'm counting on your calculations. I'm expecting you have done the good maths. All right. Now, see which one is heavy.
Debit side.
So 34,500 is what you write both sides. Are we fine?
Okay.
Now, how much you should write here on the credit side that this also will become 34,500? How much? How much you will write here that this also will become 34,500?
1 minute.
Here it is. The numbers are here. I think that 75% view was good. Zoom out. Yeah, this is better. Okay, so tell me
8,150.
8,150. So basically 8,150, if I add, it will become 34,500, right?
Yes.
So 8150 will be written on the last day as by balance CD carry down. This is the leftover money, right? And this will be reported here as 1st February to balance BD opening balance. So in the new month, this 8,150 is what we are going to start with. The new month will start with 8150. Are we fine with that?
Yes. So
And
is this on the debit side? Is this to balance or to opening balance?
that is the opening balance.
Okay.
Okay, that is the
So
opening
just
balance.
1 minute. 1 minute, sir. 1 minute.
Next month, you will continue with this. Like for example, see, okay, here only we can do that. No problem with this. See, the thing here is that you are making an account, some debit, some credit, you are closing the account, and whatever is the balance is being transferred to the next month. Now next month again you will do the same calculation. You will do the balancing, whatever like CD is here, so it will come down here, BD. All right, and then you will continue in the next month. Again, you are not going to close the business every month, right? Okay.
Yes.
And now understand language wise. Fine. I hope you understood Khanna and brothers. On first
Yes.
January, you had to receive 20. They haven't paid anything, they haven't purchased anything from you. Fine. So on 31st December, 31st January, still the balance is due. Means now they will pay this 20,000 in February. Are we fine with that?
Yes.
Look at the cash side. Okay. Cash side.
Yes.
You started the month on 1st January, you had 20,000 in your cash account.
Yes.
And then Nirmal gave you 14,500. So now you have 34,500. Okay. See.
Yes.
Okay. And then you paid Mitra 4750. Then you paid for stationery 100. You paid for rent. You paid to Kripal. You paid for drawings. You then have this SK traders. You paid them. You paid salary. After paying all of this, you are left with 8150. What to do with that 815?
Yes.
What to do with that? That will be used
Uh,
next month. That will be used in the next month, right? It's a continuous process, right? Business.
yes. Yes, sir.
Okay. So I hope we are fine with this.
Yes.
Okay. Now, what we have to do at the end of all of this is we have to make a what do you call that?
Trial balance.
Trial balance. Fine. So basically, whatever we were doing, that is right or wrong, actually we don't know. Fine. So we'll make a list, debit, credit, okay, and then this will be like particular. So we'll write all the ledgers here. Fine. So in the cash ledger, we just finished this one, Karmakar. We finished this one, right? Okay. So
Yeah.
for cash, if you see what was the balance, we close the cash. Wherever you have written BD, that is where you are going to write. So 8150, BD is on the debit side, correct?
Yes, sir.
So we'll be writing on the
No,
debit.
sir.
What?
It's 3450.
What?
It's 3450.
I'm talking about the balance, not the total amount. Okay?
Okay. So do we have to write the balance in the debit side also?
Balance on the debit side also. I didn't get that. Now tell me what.
So on the debit side in cash account, do we also have to add 8150 on the debit side?
Here I have written. Do you see that?
Yes.
I have already written that. Here I have already written this one, right?
Yeah.
So are we fine with that?
Sir, actually the thing is that on the debit side, uh, th 34,500 is the balance, right?
Not the balance.
Eight.
It is the total. Okay?
Okay.
It is not the
Okay.
balance. Do you understand balance? Your salary is 10,000, you spent 6,000. What is the balance?
Okay. Okay, sir. Okay.
Fine. So
Yes.
34,500 is the total. And actually, that total means nothing to us. That is nothing. It doesn't mean anything. What matters is how much money do you have right now? Karmakar or this Khanna company, Khanna and Brothers. What business you did with them, nobody cares. Today, fine, on 1st February or on 31st January, how much of the transaction is left? How much money you have to take or give? That is what matters. Are you
Okay, sir.
done with that?
Yes.
And again, I'm repeating, what we have to do is we have to write this name, okay, in the trial balance. Fine.
Okay.
And we have to find where is BD. BD is on which side, debit or credit? It is on debit side. How much BD? 20,000. So you will go here in the trial balance and you will write, not this, you will write Khanna and Company, okay, 20,000 on the debit side. Do you do you follow that? Because I'm not going to ask, do you understand that? There's nothing to
Yes.
understand. All right. You have a ledger. So whatever the name of the ledger is, you copy that name in the trial balance. You copy that name. Okay. Then you have already balanced it, right? So whatever you have written above the balance, forget about that. Below this, you may have written BD. Either you may have written BD here or you may have written BD here. Okay,
Yeah.
any one place you may have written BD, where you have written that and what is the amount. If the amount is $10 on the credit side, so here on the credit side you write $10. Is that fine?
Yes, sir.
Again, it is mechanical, fine, and it is like machine kind of stuff. If you see this, you do this. Don't ask why, where. Do you get my
Okay.
point? So
Yes.
first, at the first level, you have to understand this in this way. And then we will we'll add more things. There will be more ideas and logic and stuff. But for the time being, for the time being, you just need to follow the instructions. Fine? Okay?
Yes.
Let's continue with this.
Yeah.
So we are done with cash. We are done with Khanna and company. And then what else do we have? These two things done. Then Nirmal and company. See, Nirmal and company already balanced, right? Where is the balance BD? Tell me. There is no balance CD. There is no balance BD.
Yes.
Fine, because we have to write the closing one, not the opening one. Don't say that, okay, BD is here, sir. No, that is not, that is 1st January. We want 1st February, so that's not anywhere. And what happened, when the month started, we owed this guy 15,000. He was supposed to give us 15,000. And during the month, he paid, and the remaining he said, I'll not pay. So we gave him discount. So now his story is over,
Okay.
right?
Yes.
He's done with us. He has got no transaction left with us. Now, even if you don't write his name, it's absolutely fine. Because, either you write Nirmal and then you write 0 and 0. Doesn't make sense, right? So don't write his name, because now he's not a party to you, right? Accounting wise. In your sales register,
Okay.
okay?
Yes.
Okay. So Nirmal is gone. What else have we got? Inventory. So again, if you balance this, see, if you balance this, what will you get? 20,000 this side. Sorry, 25. Okay. And 25,000 this side. Done. Now here you will have to write buy balance CD. Then only
Yes.
you match. Right? 31st January.
Yes.
So 1st February, you will have to write to balance BD 25,000. Are we fine with this? Okay.
Yes, sir.
Inventory, we are going to write 25,000 here. In this one, we are going to write inventory 25,000. This is also debit side. Okay. Now back to this. Inventory done, Nirmal done. Kripal Brothers closed, accounts closed. See, we were supposed to pay them 10,000 and we paid them 10,000. So point over, right? Now we don't know who Kripal brother is. Fine. Similarly, Mitra and Mitra Sen and Company. Account closed. 5,000. Are we fine with this?
Yes, sir.
Okay, because 5,000, 5,000, no CDBD required. Okay, now this one capital. So capital, we have already done the CD. It will become BD here. 1st February, buy balance, BD brought down. Okay, so on 1st January, you had 65,000 as capital. And in this period, we are not adding, subtracting anything. So at the end, it will be 65 only. So here we will be writing capital 65 on the credit side. Okay, 65 on the credit side. Now, Karmakar account. We have sold goods to him worth 9 and he has returned goods worth 4. So 5,000 is still with him, right? Is this okay?
Can you repeat that, please?
Simple, okay. Like my mistake. I tried. 1 second. Yeah. See, let's simple 9,000, 4,000. Which one is heavy?
9,000.
You will write 9 and 9 and now do the balancing. You will write 5. Correct? That is what we were doing right now.
Yes.
And then 1st February it will become to balance BD 9,000. No, 5,000. So we have sold goods to him worth 9. But by the end of the month only 5 is due. So we'll write 5. Karmakar 5,000 debit. This is 5,000 debit. Done. Back to this. Now see sales by Karmakar 9,000. So we are showing sales only worth 9,000 in this period. So total is 9 and 9. And then To make this 9, we have to write 9. We will be writing 2 balance CD. So it will come this side by balance BD 9. Are we fine with this? 1st February, 31st January, last day of the month, opening day of the next month. Okay. So sales 9,000. On the credit side. What else? Then we have discount allowed. So again, see 500, 500. And to make this equal, we have to write 500 by balance CD 31st January and 1st February to balance BD 500. Okay. So discount allowed 500 debit. Discount allowed 500 debit. Then discount received. Discount received. Do the maths and see what do you get. I think 1000, right?
Yes.
1000, 1000. And here you will write to balance CD 1000, 31st January and 1st February by balance BD.
Sir, I have one question here.
Okay, tell me.
Sir, when you wrote buy balance 1000 on the credit side on February, why did you write it on the credit side and not on the, I mean, balance side? I mean, this is something that I don't know yet.
Why you wrote here?
To balance.
So that balance is being carried forward. Again, you have 1000, you spend 400. What are you left with?
600. No, so that's okay. That's okay. But sometimes we write buy balance on the credit side. Sometimes we write it on the debit side.
Okay, okay. See, when you write CD on the debit side, okay, BD will
Okay.
be on the credit, and when you write CD on the credit side, BD will be on the debit. It will always be like like this. If
Okay. Okay.
CD is here, BD will be here. If CD is here, BD will be here. Is that fine?
Yes, sir.
Okay. And now again, you can go back and have a look. See, all the cases, same thing. Fine. If the CD is on the debit, BD is on the credit. If the CD is on the credit, BD is on the debit. Fine. Now, discount received 1000 credit. I was supposed to write. Discount received 1000. Now stationery. So fine. If you balance stationery 100 debit. So fine. Stationery. Then rent. Same.
Sir,
Tell me.
sir, one thing that I still don't understand is what is the difference between BD and CD? I mean, in the stationery account on the credit side, weren't you supposed to write to balance BD 100 and then here buy balance? Uh, I don't know.
Can you again say that? What? In stationery,
I
what
mean, so what is the difference between CD and BD?
CD is carried down, BD is brought down.
Same thing.
Yeah, and when you are tallying, when you are doing the total, above this you will write CD, whichever side it is. Below this you will write BD, wherever it is. This is the closing balance, this is the opening balance. Okay? And can the closing and opening balance be different if you are talking about two periods, not the same period? See, this one point is the closing of this, and this is the same point opening of this. All right? What? Yes or no?
Yes, sir. Okay, I understand.
So closing is CD, opening is BD. Okay?
Okay.
Yeah, here we were rent. Fine. So this will be 250, 250, and CD on the credit side, and then 1st February to balance BD, then purchases. What happened? Purchases 30,000. Wait, I haven't written rent. Rent 250 debit. Yeah, rent 250 debit. Then what else do we have? Purchases 30,000. And since I'm writing above this, I will write 31st January buy balance CD 30. Why CD? Because above this. And now here below this, so this will be two balance.
So will you give me 1 second, please?
Yeah.
Yes, sir, yeah. So just 1 minute. So I need to. Okay, sir. Thank you.
Okay. So now we are left with these four things. Yeah. So SK trading. SK trading, see 10 and 5, 15. So if you do the balance, you will find that 15,000 is missing from here. So to balance CD 31st January, and it will be here by balance BD 15,000 1st February. So SK trading credit 15,000. Credit 15,000. Okay. Then what else have we got? Drawings. So obviously it will be 500 debit. This will be 500. So drawings debit 500. What else have we got from here? Last two, credit note. So in credit note, what do we have? See, we will have a balance of 1000 here, right? And 1000
Yes.
here. So first February, buy balance, BD, this is 5. So credit note will have a credit balance of 1000. Credit note will have a credit balance of 1000. Okay. And now the last one, salary. So here we will be having a balance of 1500, balance CD. Okay. This will become 15, 15, 31st January. And 1st February will have to balance BD, brought down 1500. Okay. So salary debit 1500. Now test. If we have done everything correctly, these two numbers should match. Okay. Trial balance. So can we start doing that? Okay. So first do the total for the credit side. Okay. And see how much it will be. 70, 80, 90, 91. I'm getting 91. Check. On the credit side, are you getting 91,000?
1 minute, sir. Yes, sir. 91,000.
Fine. Do it on the debit side and see what do you get.
Same 91,000.
That means whatever we have done, all of this was correct. Otherwise, one mistake, one like uh, any silly kind of mistake also fine, and this will not match. All right. Until here, we haven't used, I don't think we have used any rocket science. We were just following instructions. In journal, you have to decide what to write. Okay. Apart from that, once you have written something account debit to something, okay. Now, while doing the ledger posting, you like it's very easy. If this is X account debit to Y, you have to one ledger, you have another ledger Y, X and Y. In X, you have to debit the amount against Y. So here you will write in X ledger, you will write the amount and you will write to Y, and in Y you have to credit the money, all right, credit against X. So you have to write by X. Now, what can you do in this? What intelligence you can apply? You are not allowed to apply any intelligence. Like, is there any creativity that you can show in this one? Okay. For example, salary to cash. Salary to cash 1000, 1000. Okay. So in the salary ledger, you will write to cash 1000, to cash 1000, and in cash account, you are going to write by salary 1000. Can you write it in any other way? Is there any other variation possible even?
No, sir.
Okay, so this is the thing that I wanted you to understand in this segment. Fine. Now, once you have done this, now you have to do the, like, the balancing. Fine. So for balancing, draw two lines here, draw this two lines here, and then see, okay, the total is 1000, the total is 0. So 1000 is bigger, right? 1000. Now you have to write something to make this not, like, sensible. So you have to write 1000 because this was 0. Fine. So this is your balance CD. If you are writing CD here, you have to write BD on the other side. 1000. Then where is scope of creativity in this? Can you write
Yeah.
CD here? No, you can't. Fine. Can I write, okay, can I write this as BD and this as CD? No, you can't. Fine. So there is no scope of going any right or left. The rules are very strict and already mentioned, so you are not allowed to show any creativity in this part of the work. Are we fine with that?
Yes, sir.
Okay. So this is it. Now, once you have done this and the balance is coming on the debit side of the work, go into the trial balance and write the heading and the amount, whichever side the BD is on. So it is on debit side, you write it on debit side. Again, is there any creativity involved? Have you, like, you are supposed to decide, okay, salary is expense and expense is debit, so I will write it on the debit side. Were we supposed to do that?
No, sir.
Fine. So that is, like, that is what I have been telling you guys from the beginning, that in this segment, like journal ledger trial balance, there's no scope of creativity. It is like a machine. It is like a machine. So you put the journal from here and then just follow instructions. And this is what happens today. In today's world, they have made software which follow the rule. Fine. They follow the rule. And now what they do is just write the journal. You just put the journal and the system will take care of itself. On this side, you will get a trial balance already matched. Because in between, there is no creativity, there is no intelligence to be shown.
Yes.
Fine. So this is the overall maths that we have. Now I will remove all this to make some space. I think I have already zoomed out a lot. So when I zoom in, all of this will become distorted. So from journal to trial balance, we have discussed almost everything. Okay. Hello.
Yes, sir. Yes.
Okay. So once this is done, all right, again, see, the thing is, it is little bit boring, but this is what it is, and this is how it has to be done. I can give you few questions for practice, but again, problem is I won't be able to check it. I will not have that much of time to do that. So one second. uh, yeah, here I'm finding your book, and in the book we have few questions about all this journal ledger and all. And obviously, see, at your level in F3, they can't ask you the whole thing. They'll give you journal, you do the journal, ledger, trial balance. They can't ask you to do that. But if you haven't done it, you don't know the accounting procedure, right? And you will find problem at every step whenever you try to understand something. Okay. Now see here, what we have discussed right now is this chapter number 4, 5, and 6. Sources, records, and books of prime entry. That is your journal. Then the ledger and the trial balance. Are we fine with that?
Yes, sir.
Fine. Now, see, in my discussions in the past classes, I have mentioned this. Let me show this whole thing to you guys once again. See, if you are joining somewhere as an accountant, then what happens with you? Okay. See, they will come and give you vouchers, right? Vouchers. This is this is the word here. See, sources, sources. Because see, in practical scenario, who will come and give you a letter that all these things are written and now you do the entry? Are we fine with that?
Yeah.
Okay. They are not going to give you all this written kind of question the way we have got this. I think I think all of that is here somewhere. Yeah. Now, simple for this also you can see if I have hired you as an accountant, who will do all this effort for you? Who will write all this and give it to you that please do the journal? All right. They will give you, like, for example, sold goods to Suresh for cash. All right. So means he has given you cash and you have given him goods. So when you were receiving cash, you may have given him some receipt, right?
Yeah.
So that receipt is the evidence. That receipt is the evidence. So copy of that will be with you, and that
Yeah.
copy will be sent to the accountant, and the accountant will see that, and from that he has to understand that okay, this was a cash transaction, cash to sales, done. Are we fine with that?
Yes.
Fine. So that is what they have mentioned here: sources, records, and books of prime entry. Now, in the records also, with these vouchers, what do? See, with these vouchers, or you call them evidences, because every time you don't get vouchers, you get some evidences also at times. Fine. Like for example, we have done some deal, all right, also known as invoices. All of these are the source papers, source documents. All right. Now, for example, we have done a deal that I will purchase something from you at a particular date. Sorry, at a particular rate. Fine. So the deal is done. Fine. And we have already discussed you will transfer the goods and I will give you the money after 2 months. All set, all done. Invoice raised. Fine. Now, once this is done, you have to do the journal entry for this. Once this is done, you have to do the journal entry. Fine. See, I haven't paid the money, so I don't have any receipt, right? When will you write the journal entry? First of all, see. And how will you write it? Who will go and tell you? Practically think about it. In the question, write, fine, that the company has purchased goods from so and so company, and you write the journal. Correct? But think practically in the office, who will come and tell you that today we have purchased so and so goods?
Hmm.
Okay. So because see today time zero they have sent the goods, all right, but the payment you are going to do is after 2 months. So if you are waiting for the receipt after 2 months, when you will make the payment, they will give you the receipt that we have received the money. You will bring that and keep it somewhere. Now the accountant will have access to that and he will see, okay, we have made the payment, right? But as on this day, what will the accountant write? He is sitting in the office, not in the go down, right? So you have received the goods. How will he know? Do you understand?
Yes, yes.
In this case, what happens? The company will send the goods and the invoice, right? The accountant will get the invoice, and based on this invoice, he will write the journal entry for purchase. So he will write purchase to A, done. And then on this day, when you will make the payment, when he'll get the receipt, he will write cash to A. Sorry, A to cash, because we have to pay. We are paying, right? A account debit to cash on this day. Do you understand the evidence that we are talking about? In practical life, nobody is going to come up to you and tell you that they see this has happened. Fine.
Yes.
The office system is created in such a way that you will get to know that what is going on around, because everybody knows their work. Everybody will do their part. Fine. The cashier will make the payment. He will take the receipt and he will put it in a place. Now your task is to go and check there, or there will be somebody whose task is to collect all these papers from everywhere and give it to the accountant. So you will be sitting on your desk and you will get the vouchers. Now, if you have missed a journal entry, you haven't done a journal entry. So, like either it is your fault, you have the voucher on your desk and you didn't do the journal entry, or you didn't get the voucher. Now, why you didn't get the voucher? So the guy who was supposed to collect and bring it to you, he didn't work, done his, he has not done his job uh, in a better way. Fine.
Yeah.
Or the person who made the payment didn't kept the voucher where it was supposed to be. Do you understand?
Yes.
This is how a system works. All right. This is how a system works. Fine. All these things are explained in this. Fine. Sources, records, and books of prime entry. Now, one more important thing. Now, fine. With these vouchers, what will happen? So let's write it this way. You will get evidence. The accountant will get the evidence. With this, what he will do? He'll write the journal and then he'll post it in the ledger. Post in ledger. Do you understand?
Yes.
This is what accountant is going to do every day. Collect the, like, get the evidences, get the vouchers and invoices, and then do the journal and do the ledger. Every day you do this. Fine. Then at the end of the period, transfer all of this into the ledger. Okay. And then from the ledger, make the final accounts. Done. Fine. We have seen how to work from here to here in the last question.
Yes.
Okay.
Trial balance.
What?
The third step is trial balance. Yeah.
The third step is trial balance. Yeah, I have written ledger. Trial balance. Done. Finally here. Now see, what purpose does the journal solve? Because practically I have told you once, but again I am repeating this part. See, generally what happened? Journal is what? Journal is a big register. Fine. It's a
Yeah.
it's a kind of big one. All right. So you have all these papers here. Fine. And this is your journal. Now, whatever is happening, you are writing it in this, like, in this register. And from this register, you are transferring it to the respective ledgers. All right. What are these ledgers? These ledgers are the, like, the thin registers, personal accounts for everything. Fine. So
Yes.
those are also, like, for us, what we did, we just, like, we drew like this, and that was like, this one thing is our one ledger. But in reality, this is SK trading. This will be one, like, thin register. Fine. All the transactions with SK trading has to be reported in this one. So if I am the accountant, I will have the journal on my desk and all the small registers lined up. Fine. And like, whenever I do one journal entry, I will find, okay, like anything, discount received and SK trading. Fine. So I will find SK trading, I will find discount received. Bring them down. I will do the respective ledger posting and I'll put it back. Fine. So this is what we do
Yeah.
in the ledger, and this is called bookkeeping. This is what we keep on doing over and over and over again. Fine. Now, after doing all of this, if I ask you that, okay, what is the total purchase? You will look into the purchase account, the register, remember,
Yes. Yes.
and whatever is the balance there, that is the answer. This is the purchase, correct?
Yes.
Any question, how much salary we have paid till date in this particular year, you will quickly pick up the salary account, the register ledger, and from there you will add up the numbers and tell me the answer. Correct? What information is this giving me? What can I use the journal for? What is the question which can be answered by the journal? There is no question. Think of it if you can think of it.
Yes.
Because whatever is happening, you are writing everything in this journal. Whatever is happening, you are writing this. Correct?
Yeah.
First thing.
Yeah.
Second, here the entry is supposed to be done in a chronological way, chronological order. That means something that has happened on 5th has to be reported first, then what has happened on 6th has to be reported, then 7th, then 8th. You cannot mix
Yes.
it up. Now the problem with this is, imagine, can we have one register where 10 people can come and write the entries, and that also in a chronological way? Think about it practically, think about it. There is one
No.
copy in which 5 people want to write things. Will that work?
No.
Now the issue is that if my company is getting bigger and bigger, the number of transactions will increase. So the number of things which I want to write in the journal book is increasing, but I cannot do it. Why? Because at a time, only one guy can do entry in the journal, right? So I mean, it doesn't make sense. I can't hire more people in my accounting team if even if my business is growing. Does that make sense to you?
No.
I'm saying if your business is growing, okay, you are having more and more transactions.
Yes.
So what will you ask the accountant to do? Like, you will ask him to work for 24 hours and write, because you can't hire two accountants. Both of them cannot sit and do the journal together in this register, right?
Yes.
So how will you split the work? If chronological order was not a problem, all right, then I will take one page, you will take one page, I will write my journal entries, you will write your journal entries, and then we'll club it together and put it in the register, right?
Yeah.
But we can't do that, right?
Yeah.
One thing after the other, one thing after the other has to be reported, so we can't just put things haphazard way. Do you understand?
Yes.
So this was posing some kind of problems and limitations. So the people of that time, when they came across this issue, they found a solution for it. They split the journal into 8 parts. Okay, these are called subsidiary books. So they created subsidiary books instead of journal. So basically, like, this is another way of doing journals only, right? And now what they did was they created something called purchase day book. What does that means? all the credit purchases, fine, all the credit purchases of inventory will be reported in this one,
Yes.
okay, and all the credit sales of inventory will be reported in this one. So now what is happening? See, now I can hire two people, right? One guy will do only the purchase entry and another guy will do only the sales entry. Now we can do that, right?
Yes.
Okay. So purchase day book, sales day book, purchase, return day book, sales return day book. Okay. And then we have two more, bills receivable day book and bills payable day book. Now, after all of this, we have something called cash book and something called journal proper. Okay, basically, this is your miscellaneous. Whatever will not qualify anywhere else will be written in journal proper. Fine. Now, see, you can hire 8 people to do the work. And like this will be the subsidiary book, this will be the journal. First we will write here, and now from here we'll directly transfer the accounts into the ledgers. So the ledger is still what it was, we haven't changed the ledger. All right, what we did was we just changed the subsidiary books, we just changed the journal. All right, are we fine with
Yes.
it? Now we don't need the journal, now the journal is closed, we don't want to work with journal. Fine. Instead of that one thick register, now we have again got small 8 registers. Fine. And there are specific things which are to be reported in these. Okay. And this can be like handed over to individual teams. I hope you know this. Today we have a team for collection. They call it accounts. Like it is a team in accounts department. Receivable team. So what do? They just maintain the records regarding the receivables. Fine. Payables team. So they just maintain the records remaining the payable. How much money we have to pay, when we have to pay. So coordinating with them, talking to them. This is what this department does. Okay. This is what this department does. Are you following till here? That one
Yes.
journal is now thrown, and now we have these 8 books where you can write. Now, see, for any small business, 80% of their transaction, or maybe more than 80%, will be recorded in one book only, right? They don't even need to learn journal because most of their transaction is in cash.
Yes.
Fine. So now what is happening here is you have broken the journal into different pieces, and it can be worked accordingly, and then from there it will be transferred to ledger, and then the normal procedure will continue, ledger to trial balance and then final accounts. Fine. All of these books are known as books of prime entry, books of prime entry, because the first entry is happening here, right? See, again, in a diagram way, I have already always told you that accounting is a machine, right? So earlier, this was it. You can put only journal, right? And then you will get the trial balance. Now the problem is that this was too narrow, fine, and it was not possible to put all the information in, like in a fast way. If the number of transactions are increasing, then you will find that your work is getting choked. So what these guys did was, instead of having only one way of input. All right, they expanded this whole thing and they have made it now like this. Okay, so now what they have done is this one. See, you will get your trial balance here, no worries. You can put through journal proper. Okay, you can put the transaction from there. This is like, let's say, cash book. So you can put your transaction through this. This is purchase day book. So you can put it through this. Sales day book. You can put your information through this. I hope you understand now, right? So now the
Yes.
work can be done in a little bit quick way, right?
Yeah.
Many people can be engaged. Now we can engage many people to get this work done. Okay.
Yeah. Yes.
So that is it. This whole thing is, all of this that you have here is known as books of prime entry. Prime entry. Fine. Now in this system, okay, first of all, you will make one journal book. Fine. Why? Because if you remember, last thing was what? Journal proper, right? Which is the miscellaneous. So if there is some transaction which cannot be written anywhere, where will you put it? So you will put that in journal proper. Okay. Like for example, when you are um, interest, all right, you are not paying interest. It is outstanding. You are not paying interest, because if you are paying interest, where will it be written? If you are actually paying, it will be written in cash book. Correct?
Yes.
Wages. If you are paying wages, it will be written in the cash book. But what if you are unable to pay? You are not paying it right now. So what will you do? You will not even write wages. You will be writing this entry: wages account debit to outstanding wages. Okay, let's say 1000, 1000. Fine. The point is, where will you write this? Because now you have journal, what was that? Sales day book, purchase day book, and all that stuff. Where will you write this? So the answer is, you will write this in journal proper. Are we fine with that?
Yes.
So, like, I'm just trying to give you a practical approach to this. Fine. So that it will be little bit easy, because you can practically think about an office and these things happening there. All right. Okay. This is the max that, like, that I can do this in a practical way. Fine. So now, for example, wages paid, we used to write wages account debit to cash, correct? And we used to write this in our journal book, correct? But now I'm saying this journal does not exist. So where will you write this? Wages, if you are paying wages. So for this, you will have a cash book. And in the cash book, this is the receipt side, this is the payment side. So directly you will write by wages, let's say 1000 or 10,000. This is what you are paying. Okay. Now from here, it will be directly posted to the ledger. So which ledger now? Wages. You will directly go to the wages. If it is by wages here, there you will write to cash 10,000 and you are done. So see, this is what I was talking about. You will put the entries now in these books and then you will transfer it to the ledger as usual. Okay. Now see here, types of source document. You remember invoice, vouchers. This is what we talked about, and now they are talking about, see, quotation, purchase order, sales order, goods received note, dispatch note, invoice. All of these are what? These are the documents that you use in doing business. All right. Evidence, right? These are all evidence that something has happened. You have done some transaction. These are all evidences of something that has happened, and then you can do the accounting for that. Okay, read all of this once. Please don't get too emotional with this. All right. See the credit note we already discussed, right? The homeware shop has been overcharged. So when you overcharge your client, what do? Technically, you should return the money, right? But that is not, returning money is not there in the business. So what do? You give them a credit note. You tell them, okay, next time when you buy, I will adjust this 100. Okay. Other documents are there. So again, too much of theory. The need for books of prime entry. So in this book, what they have done is they haven't paid too much of emphasis on the journal, right? The journal that we did and then all that. That is important because see, this is a whole story, right? I started with this book of journal and then I brought you here. Fine, purchase day book. Now, from here, I will take you to the today's world where they use application and software. Fine. So it's a process. It's a process. It started. So this was the idea. Then this changed, that changed, and today we are here. The whole thing you need to understand if you actually have to understand accounts. So now see, this is what they're talking about. And here I think E, F, G, right? So that is how much. I think they haven't given us these two things. Fine. So fine. Bills receivable day book, payable day book. Don't use this. Fine, because in ACCA they are not talking about this. They are talking about only these things. And in cash book, they have added one more thing which is known as petty cash book. We'll talk about this also, no problem. But this is actually included in cash book only. This is something which is not supposed to be written separately. They have done it. Okay, like these are basic, small things, some adjustments here and there. Fine. So no problem. We can adjust that much. Moving from here, see now they are talking about sales day book, purchase day book, fine, and how you will write this and how will you post this. This is now what you have to learn. All right, and I think there is one one question where they have done the ledger of this. Let me check. See these accounts: cash at bank, shelves, assets. So they have given small transactions like 2-3 transactions and how you are going to post it. Fine. In this only, they will give you full, like this is I think the question. Transaction is given and then they have done the entry. See all the ledgers. Fine. So you will find some questions here where we can learn about this. Now coming back to this point, because now we have to discuss what are you going to write in these four things and
Above.
you are going to write that. Okay. Purchase day book, sales day book, purchase return and sales return. Fine. So see, first of all, understand this one thing. Okay, let's talk about purchases. Okay. As a company, as a company, you can buy two things. Either you will buy inventory or you will buy asset. Do you understand this?
Yes. Yes.
Is there any third element that you can buy?
No.
So either inventory or asset. Fine. Now there are two ways in which you can make a purchase. Either you can do a cash purchase, means give cash, take the stuff, or you can do a credit transaction. Take
Yes.
the goods and pay later. There is no third option here, correct?
Yeah.
So take 1 minute and just see and agree. There is no third element in either in this line or in this line. So see,
Yes.
fine. Now, when you are buying inventory, basically what have we got? See, you are buying inventory on cash. Okay, you are buying inventory on credit, you are buying asset on cash, you are buying asset on credit. Four options we have got out of these things, right?
Yes.
Now, when you are buying inventory on cash, you will write that in the cash book. Is that fine?
Yes.
When you are buying asset on cash, you will write that on cash book.
Yeah.
Cash book is very simple. Fine. Cash book is the most simplest thing. Cash comes in right here. Cash goes out right there. So if you are buying asset, you will write buy machinery, buy furniture, whatever. You will have to write because cash is going out, right?
Yeah.
Okay. When you are buying inventory, you write buy purchases. You will have to write here if it is on cash. Why? Because cash goes out. You have to write. Fine. When you are buying inventory on credit, you have to use purchase day book. Okay. And when you are
Yeah.
buying asset on credit, then that will be written on journal proper. Is that fine?
Yes.
So, out of all the four possibilities, only one thing will go in purchase day book, right?
Mm-hmm.
Out of the four possibilities, only one thing will go in the purchase day book. Is that correct?
Yes.
And that is what? That is when you buy inventory on credit, then only it will be written in the purchase day book.
Yes.
So if I have a business where I am buying and selling furniture, and if I buy furniture on cash, that will go in cash book. If I buy furniture on credit, that will be written in the purchase day book. Okay. And if I
Yeah.
buy some computers for my office, okay,
Yes.
now it will go anywhere except for purchase day book, right?
Yeah.
Because if I'm buying that computer on cash, it will be in cash book. If I'm buying that computer on credit, then also it will go in journal proper, not in my purchase day book. Fine.
Yeah. Yes.
Same discussion, same dialogue, complete copy and paste. For what? For sales. Same story. Either you will sell inventory, or at times we sell some assets also, right? So the computer
Yes.
was old or the furniture was old, you sold it, correct?
Yeah.
And again, all of this can be done either in cash transaction or a credit transaction. Is there a third transaction, third way? Is there any third thing? Like, can you sell something else apart from inventory and asset?
No.
And can you do it in any other way apart from either cash or credit?
No.
So we have got what? We have got four things. Again, four cases. Okay.
Yeah.
Now, if you are selling something on cash, that will go on cash book. Simple. Fine. So when you are selling inventory on credit, it will go on sales day book. Otherwise, it will go on journal proper. Are we fine with this?
Yes.
Now, how do we do this? Fine. So let's talk about this purchase day book. So what do we do in this purchase day book? See, we actually make a list. Fine, we make a list. We call it day book, but it is not a day book. It is, I don't know why they call it day book. Fine, they call it purchase day book. Fine, what we do is, like, for example, 1 month. All right, so for the full month, they will make the list. Like, all columns and lines will be drawn here. Date, and then we have particulars, and then we have amount and amount. So this is like details, We'll do calculation here. This is the final amount. Now, what we have to do in purchase day book is simply make a list. So on 5th January, Messrs. A Limited, fine. We have purchased from these people, let's say 1,000 chairs at the rate of $50 each, and then we have also purchased something like some table, okay, 200 table at the rate of $100 each, and whatever furniture, like whatever I'm buying and selling. All right. So I have purchased all of that. So you will make a list over here. Fine. This is the total amount. Now there was a trade discount. So find trade discount, subtract, minus the trade discount. Now whatever you get, if that is the final amount, you write. If there is some tax which you have to collect, add all that. So do the maths and transfer the money here. So let's say this is 5,000. All right, done. On 10th January, again there was another client, Messrs. B Limited. Okay, so you do the same kind of stuff. You do the same, like I purchased this. These are the maths, and this guy is going to, like we have to pay 7,000 to them on credit. Okay, in this they will tell you that on 11th you have purchased computer. So don't write it in the purchase day book. This is what we discussed, right? Okay, so just make a full list of this for the entire month and then do a total. You will get 12,000 here. Now for all of this, all right, you don't have to write this anywhere, but mentally, all right, mentally think about it. One journal entry is enough, right? Because now purchase account debit 7,000 to A, to B, to C, to D. If like if you have sold goods to 100 customers in 1 month, you can write all of their names and all of this money, 5 and 7, and sorry, this will be 12. Do you understand?
Yes.
So this is easy, right? This is easy. Because earlier, every time I was writing like this account and transferring, now I can do the journal at once and then one entry will solve all my problems. And actually, I'll not do this journal entry anywhere, right? Because we don't have the journal, remember? We don't have the journal now. We have already thrown it out. In journal proper, again, if you write, that will become like double entry. 2 times you are writing, double posting. So what we have to do is, from this, we'll directly send it in the ledger. So we'll make the purchase ledger. And in the purchase account, see, we'll write all of this. Purchase is debit, remember? So we'll write
Yes.
by A, by B, by C, whatever sales you have done, just write, make the full list here, the 5, 7, like this. Right? And from this only, directly take the numbers to A account. So in A account, A has purchased goods from you, right? No, I think A is selling goods to us,
Yes. Yes.
right?
Exactly.
Okay. A is selling goods to us. So A will be our creditor, and I said debit and I wrote the whole thing on the credit side. This will be here, right? Purchases are all debit.
Yes.
I said debit and I wrote it on that side. I think now I also need some break. चलो भाई अरे okay. So this, and A you will write buy purchases 5,000. Okay, for B you will write buy purchases 7,000, like that. So with one entry, like in this list, you can keep on adding, and then at one time, like 31st of the month, you open all the registers. One day, just put all the entries, and you are done. Easy work. Similarly, the same thing. See, 10 people can work on the ledgers at the same time because ledgers are already different files. So you are putting entry in purchase ledger. I am putting entry in sales ledger. Both of us can work simultaneously. Correct?
Yeah.
The point is that I am making the purchase book, you make the sales book. Fine. This is how this part of the work is done. Okay. 55, I think. Yeah. So in this segment, see, they have given all this, and then from here they have started doing sales day book. Fine. Sales day book is the book of prime entry for credit sales, right? Credit sales of the inventory. So that word is missing, and you may actually sale is a word which is used for inventory only. So that's why they have not written it. Okay, so please don't get emotional when you just see credit sales, because sold furniture for or like for example, sold car for on credit. Okay, so you are not going to write that in the sales day book. That was an asset for the company. Now here what do we have? The sales day book is used to keep a list of all invoices sent out to customers each day. So this is what we were talking about, right? You just write the numbers, name of the customer, and how much money, what was the amount, and then you write the total. This is what we did also. We did with purchase. Fine. They have again expanded that. Fine. Out of this 105, how much was because of boot and how much for shoe? So if you want to segregate it, do that. The total 1487 will remain 1487 only. Okay. And similarly, the purchase day book. So the total amount is 561 for purchases so and so, for electricity so and so. That is what it is mentioned. Purchase day book. Sales day, purchase day is the same thing. Okay. And the returns. Now, what we can do is, before getting into cash book, we'll do one question on this. Then I think it will be more sensible to finish this one and then move into the next segment. And here I don't see that we have a full question. All right. So again, I will have to bring one question from outside. We'll do that so that these four things, sales day book, purchase day book, sales return, purchase return, is clear. Okay, then we'll move into the cash book and the remaining stuff, petty cash book. Fine.
Yeah.
Thing is, if we are okay with this, if you do understand completely what this is, what this basics of accounting are, it will be easy for you to go further into the chapter and do the other things. Okay,
Yes.
let's keep it till here only for today. I can hear the pain in your voice. Okay,
Okay.
so
Thank you very much, sir.
welcome.
Thank you. Good